Hey folks, Dan Frio here with your real estate update for July 10th, 2025. So we've been waiting all week for this number right here because a lot of people are saying the jobless numbers are going to skyrocket. There's going to be a lot of people losing their jobs because of the new tax bill, because we're going into a recession, and also the tariff wars. Well, the numbers there so far look good. So we're going to focus in on this and how this might actually reduce these, but by how much? So what we're going to talk about in today's video, how much risk premium is built into this, how low can rates go if the tariffs get actually settled, and then we focus in on it and realize we're not going into a recession and we're not going to have massive jobs losses. So we're going to focus in on that. Can it happen? Absolutely. Will it happen? Don't know, but let's focus in on that because a lot of analysts right now are confused and really don't know what direction we're going in at this time. So without further ado, let's get to these things. So my name is Dan Frio. I try to explain to you guys every day what's going on with these and specifically the whys behind it. I want you to understand why these change on a daily basis. Okay, so here's what's happening behind the scenes. The Federal Reserve, here's what they follow. They follow inflation, they follow the PCE, they follow unemployment rate, and they really don't focus on GDP, but we'll put that in the charts. So here's the numbers they really focus in on. This is why they were created. Okay, so they control this rate right here. This is the federal funds rate. It really doesn't mean anything to me and you. It does mean things to banks, and banks will adjust their short-term rates to this, but the Federal Reserve doesn't really control those rates. The banks do. Okay, so now let's get over to the news that we had or what's coming down the pike. Well, the Federal Reserve, they're meeting in 20 days. What are they going to do? Well, most likely they're not going to do anything. And a lot of people, they were saying, well, if this unemployment number came in really good, well, they might cut. Well, now there's over a 90% chance they're not going to cut at the next meeting. So this next meeting in September, they're supposed to cut, and there's over a 60% chance. This really didn't get affected by today's numbers, but this did right through here. So the whys behind it, well, let's get over to it. Here's what we were focusing in on. The jobs numbers was the only really report this week that really made a difference in the markets. So if you look at the previous numbers, we were at 1.95 million people on continued jobless claims. It was supposed to go to 1.98. Everybody's expecting this to skyrocket. Well, it came in at 1.96. So just a little bit more than we were previously, but not close to where they expected. Okay, so let's look at initial claims. How many people were initially unemployed? Well, last reading was 232. They thought that would uptick to 236. It actually went down. So the jobs reports aren't looking so bad. And if you go back in time, they're pretty stable. You can even look at that in based on the unemployment rate that you can see right through here. So the unemployment rate's been basically sticky in the threes or fours over the last couple of years, and that's good. That's a good economy. So now, what is the risk premium built into mortgage rates right now? Well, to figure that out, let's get over to the bond markets. Okay, so here's what we focus in on, or here's what we're going to focus in on today. We want to figure out how much risk premium could come out of bond yields and where could that send mortgage rates. So let me give you a little bit of a lesson here. If you ever talk to an old timer, they're going to tell you, okay, if you want to really focus in on mortgage rates, well, you can actually watch a lot of the news channels today. They're like, okay, the 10-year Treasury has a huge impact on mortgage rates. Well, it kind of does, but if you really want to know what's going on with mortgage rates, you should check out the mortgage bond. But let me show you something. The 10-year Treasury, here's what it is. So normally in history, you would add 1.75. That was the risk premium built into this. Okay, 1.75 was the historic data back for decades. Okay, so if you did that today, you'd be at 4.3. Let's add 1.75 to this. That makes it pretty nice. We're at 7.2. Okay, or 6.2, right? Okay, 6.2. You go over to here where the numbers are, it's 6.7. So there's about a 0.5% premium based on these numbers built into this. So as the markets stabilize and as the news comes in better and better and better, hopefully you're going to get this number. And this number, if we're in historic terms, should be about 6.25. Okay, so that's where they should go. Now, the risk premium in this is right through all this. People are telling us that the jobs numbers are going to skyrocket. They're telling us inflation's going to skyrocket because of the new big, beautiful tax bill and tariffs and everything else. But a lot of people just are getting it wrong. What is going to happen, folks? I don't know. But what I want you to understand is you see one side of the coin that's dismal and gloomy. Well, how about on the other side? Well, let's just get it this way. If you ever watch the news that way, let's just go in the middle And basically, that's where the facts would be. So if you base it on this thing, let's just go up and say, well, the bond premium spread should be a little bit more than that. Okay, then mortgage rates should be maybe 6.3, 6.4. So there's almost still a 0.5% that could get sucked out of this number through here. So that's what we're focusing in on. Will it happen? I don't know. Can it happen? Absolutely, if all these numbers continue to come in as good as they do. So really, like I said, the only piece of information we had today was continued jobless claims and initial jobless claims. They weren't as bad as many economists expected. So how'd the market react to those? Well, let's get over here. The Dow Jones down 57. Going to say that's really a non-event. S&P down 2. It just hit a record high, so this is a non-event. NASDAQ, nothing. So we really don't have anything across the board here that's really giving us much direction. You have oil down, still over $65 a barrel. Let's see what cryptocurrency is doing. It hit 112 yesterday, an all-time high right through here, so that's still kicking it. This also tells me the risk premium on consumers. Okay, so people are buying Bitcoin. That's usually a signal that the risk premium is on, meaning people are taking a little more risk for a little bit higher returns. And usually you do that when the economy is a little bit comfortable. And so when I look at Bitcoin, if it's up one day, I'm thinking, okay, we got good news for today. And then you usually follow through and the rest of the news is good as well. So that's what we're focusing in on there. Let's get over to the bond market that we see here. So we focus here on the channel. We focus in on the MBS. This is a mortgage bond that trades on Wall Street. This is actually the bond you should be following because the yield on this thing is the biggest component of your mortgage rate. So how your mortgage rate gets created, they take the yield on this bond. Yes, this bond. They add in LLPAs, and I did a video about that about 2 weeks ago on our live events. And then the banks add in their profit margins. Thus, it equals out to this right here, your interest rate. Okay, so that's how this is factored in. So that's what we focus in on a daily basis. We want to know the economic news on the economic calendar that will be affecting these and these, and then ultimately how those flow over to this right through here. So far today, we're going to see probably just a complete flat market. Well, no, we're going to give back a little bit. It's down 15. So we're going to look at rates. Rates might pop just a little bit to maybe 6.8 for the day. I don't think we're ever going to get back to 7% unless just some tariff thing comes in that really blows out the numbers. But I think we're basically capped out right now, and the numbers going forward should be a little bit better every day and every week until we get to equilibrium on where bonds are and mortgage rates are. If you're confused, stay tuned every day, folks, because as you watch my videos daily, you understand the bond markets, you understand economic news, and how all those affect these things over through here. So what we're expecting for today is mortgage rates just really are flat to up just a hair. Nothing really to write home about there. The stock market across the board through here, there's really nothing let's go over to the markets to see what they're doing. There is Nvidia's all over the news. Now we have copper prices. I was just watching an interview about copper. If we open up about 7 more of our copper plants that were closed down over the last decade or so because of a lot of environment issues and things like that, if they can get those back online, we possibly could be a country that's self-sufficient on copper as well. And then if you go down through here, the Pentagon just became the largest shareholder in a rare earth mineral MP shareholder share surge. I'm going to talk about this at the closing bell. I don't know how the Pentagon has become the largest shareholder of this, but I'll focus in on that and explain this to you at the closing bell to see what this means. But we're also going to come back. When we come back, I'll explain to you what in the heck's going on with interest rates. But so far today, folks, you're probably not going to see much movement at all in interest rates because there's really no shock and all in the markets today. So that's our report for today, folks. To give you a little bit about myself, my name is Dan Frio. I actually do this report twice a day to inform you guys what's going on with mortgage rates. And the reason for that is I'm actually a federally licensed mortgage loan officer. I do this for a living, folks. I work at a federal bank, believe it or not. The cool thing about our federal bank is we're set up with 33 other lenders. Okay, you might ask why. Well, we have a slogan here. It's one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how do we do that? Well, that's exactly how we do it. My bank is set up with 33 other lenders, just like a brokerage would. So think of it, we're a federal bank. So I'm licensed in all 50 states as well as Puerto Rico, and I'm also set up with 33 other lenders. I can use their rates, their programs, and one of their programs is right down through here. If you're buying a home right now, check and see if you qualify for this $7,000 down payment assistance program. There's no payback. There's no lien on your home. It's almost like free money. If you're out there looking to refinance, check out this right here. It's going to allow you to put in your information and provide it to me. What rate are you looking to refinance? You're at 7.5 now. You want rates when it's 6.5. You want to be notified? I can just do that. So just click this. What you're going to do is fill out your information right through here. When that rate hits right where you want it to be, I'll be getting you on the phone and we'll be getting the paperwork started. And here's another piece that we just put in right through here. It's a little hard to find, but if you've already had your loan you already applied at a bank and they sent you your loan package, if you want to see if maybe I can get you a lower rate, maybe lower fees, maybe both of those, check out the loan estimate review. We have it right through here. So what you do, you'll click that. Down through here, you're just going to give me some of your contact information. You're going to upload your loan estimate in here. I do need to know what your credit score is, and I do need to know what your closing date is. If it's a refinance, just put it out like 45, 60 days so we know that it's not urgent, but I will be getting to this. If you do this, I'll be back to you within 24 hours with a video personalized just for you. So that's what we do here at the rate update. So my name is Dan Frio. I bid you a farewell for this afternoon. I'll be back at the closing bell to let you know how all this mess ends for the day. Thanks for watching, folks. God bless. Have a fantastic afternoon. See you at the closing bell. Bye-bye.